what I'm anticipating for this week. So this is EURUSD, right? I took some trades on EURUSD last week based on the Tony Ike strategy, and I also make use of liquidity, which is very important. So before I entered any of this trade, my main aim was to get a target, like where the market is heading to. You get, so I went to the 4-hour time frame. I went to the 4-hour time frame and then I marked an area of liquidity. This area of liquidity, this high, this long week was an area of liquidity. I was targeting this area of liquidity because we had a break of structure here. Market pulled back into this demand zone and I was looking for buys so that I can clear out all of this liquidity and then observe what is going to happen when price gets to this liquidity here. So immediately I scaled back to my 15 minutes time frame where I get my entries. It is safer to take entries on 15 minutes because it's fast. You get, even if you want to be slow, I'm not a swing trader anyways. This was the one I had on Monday. This one, I think this was the one I had on Monday. A break of structure. I marked my breaker block. The inducement was somehow far, so I did not take this trade. It was a slow trade, however, but it still hit TP. If you notice something with this strategy, yeah, whenever price gets to your entry, like whenever price clears out an inducement to tap into your order block or your breaker block, it tends to move faster in your direction most of the times, except when you have news events ahead of time. Then you see the market trying to manipulate, trying to accumulate the market and trying to manipulate so that it can distribute during the news or maybe after the news. You get, I didn't take this one because price just got to a demand zone here. Price just got to a demand zone here. It shifted structure here, came back, swept inducement and pushed. So I started looking for my buys, targeting this liquidity that I marked on the 4-hour. So the one I actually took was this one. You see at a clear break of structure here. We have a breaker block, inducement form, price came back to sweep that inducement and immediately rallies to my TP, clear out that liquidity. Now look at something here. Immediately price cleared out that liquidity, I started watching what price wanted to do, and immediately I noticed there was a shift of market structure around here. You get, there was a shift of market structure here. At that point, there was a shift of market structure there, and then I marked out the order block that was responsible for that shift, which was this order block, and then I also marked out my inducement. This was clear inducement. Price just came back, swept it. Price swept that inducement and then it started dropping again. My stop loss a little bit above, and then my target was this longer wick here. This was my area of liquidity next. That's where I was targeting, and immediately price went there to hit TP. Immediately price hit TP, it pierced, it went down with momentum, creating another low for me, creating another opportunity. Every single break of structure in the market is an opportunity for an entry. You get, depending on what strategy you use. You get, so I waited again, and then I discovered that price was finding it difficult to buy again, maybe to any demand zone above this way. It did something and broke structure again, creating inducement, leaving this other block behind, mitigating this other block, took us again to TP. But immediately after this trade, I was so confident about this one. Now this other trade, I missed it because I was doing something, so I never had time to enter this trade. When I saw it, I was like, it's fine. This was a 1:3. The one was a 1:5. This one was a 1:5. This one also a 1:5. You get, so it's literally the same thing. Break of structure or shift of market structure, inducement, liquidity zones, you know, some people feel like liquidity and inducement is the same thing. They actually sound the same, but they are not the same things. You get, inducement is like a trap where the market makers place their orders, and instead the retail traders are going there to place their stop losses. So many people had their stop losses where I had this inducement. So many people were buying from this other block here. You get another, so many people were buying from this tiny other block here, and their stop losses were somewhere around here, and then they got liquidated, and then price moved immediately. Now for this week, what I'm anticipating, let us go back on the 4 hour time frame. On the 4 hour time frame, I mark my area of liquidity. Now observe what price is doing here. We have this long week here. Price came and pierced below this week, collecting liquidity from this low, and also collecting liquidity resting below this low here. Pay attention to what price did. There was no closure. There was nobody closure below this zone, so I feel like the downward continuation is over for now. There was no continuation, there was no closure. So what we have to do now is the same liquidity, is the same thing, I did here. When price pierced below, even though there was a closure, you can see a massive dip down again, and it gave us a nice shift of structure, making it still valid. But this one is more powerful because the market is actually bullish at the moment. So what we are looking for, we should be concentrating on the buys. So immediately price found it difficult to close below this longer wick with the body, we know that the market is trying to change its course. Because if you notice, this is the whole move here. There was no body closure below that area. So all we need to do back is do the same thing. Go back to the 15 minutes and look for a shift of market structure, and then we'll start buying back, targeting our next liquidity. Our next liquidity is going to be that this very high that market created. This is going to be our next liquidity you get, and then eventually there should be a trend line liquidity that has to be taken out. Generally, we have this trend line there. We have this trend line where I don't want to draw like that. To draw a trend line from your two recent lows, two recent highs, sorry. We have this trend line. Immediately this trend line get broken, you get, because now we are having a shift of market structure here. We're having a market structure shift at this level. We have the shift at this level. We have a shift at that level there. So what I'm expecting price to do is to push higher, breaking out this trend line, and another, when price gets out of this trend line, our first area of liquidity is going to be this double top. Remember, I have a high and another high, creating double top, creating an area of liquidity. You get, price will try to buy towards this area of liquidity, and this entire move, not something, whenever price creates highs and lows like this, highs and lows, immediately breaks that trend line, immediately breaks out of that trend line, it tends to pick out every liquidity resting right up to the last point around here. You get, that is in the direction of the market. Like in this case now, I'm sorry, in this case now we are bearish. You get, we have been moving like so. This is what the market has been doing, right? We have our trend line here, we have this trend line. Now what market wants to do, if market gets out of this area, market does something like this, shift structure, comes back to mitigate breaker block or other block, price is going to buy in such a way that you want to clear out all this trend line liquidity. So what you should be targeting should be all of this trend line liquidity. This is what your target should be. You get, so that is exactly what price is trying to do right now. So we have a shift here. I want to see a little bit pump, something like this. If you get a little bit pump, creating inducement, price should even create inducement, then something like this on this breaker block, and then another we're going to be buying again towards this area of liquidity. You get? So it's just simple liquidity, areas of demand and supply. It depends. On the 4 hour, you might look for an order block or a breaker block for your point of interest. When price gets there, you wait for a shift of market structure, or you can target liquidity zones, long wicks, double top, double bottom, and then you wait for price and watch the reactions at that level. So many traders are now going to fall into a trap. They'll feel like they have to start selling from this order block. That is why they say you have to know your buyers. Go to the 4 hour time frame and know your buyers. We already have that on the 4 hour time frame. So many people already feel like this is a break of structure. It is true, it is a break of structure, but it is not valid because there is no candle closure on the higher time frame on this area. You get? There is no. Let me go there again and show you guys something. Let me show you this. Look at the break of structure. You can see the closure. You get? Look at this other break of structure here. After all of this, you could still see a candle close below. You could still see a bearish candle close before you even get to see a bullish candle. But yeah, we had no bearish candle closure, and already we have a bullish candle. There might still be a possibility that price might react here and drop again, but to me the chances are low because we have an engulfing candle. Firstly, we have an engulfing candle. There was no closure below the liquidity zone, and price is still trying to buy to the upside. You get? To have to look for this now shift of market structure. If price get out of this liquidity trend line, we are going to buy, target now this liquidity here, this high, this last high here. That is going to be where we'll be targeting price. You get? And you know how far that's going to be a long ride. This week might be bullish. So let's just wait for the structures to be fully formed, and then we can see how the week is. I like to trade EURUSD most of the times because my entries are more pinpointed and they're very accurate. I like trading EURUSD a lot, more than any other pair. I used to trade gold too. Just that gold, with gold I have some things I use. If you want to help yourself on gold, just take this thing I'm going to tell you now. Never sell on gold, no matter what. No matter your analysis, never take a sell on gold. It's as simple as that. It's difficult for you to take a loss. You get? So that will be for EURUSD. We are going to talk about any other pair, but not now. So you guys have a great week. If there's any question, you are free to ask. I'm going to explain in case you need any verifications. Good luck to you all. Happy trading week.